Starting a business is an exciting and challenging journey, but the process can be overwhelming. That's where Assurance Financial excels. We can help you form your business from start to finish. In this video, we are going to address choosing between a corporation and a limited liability company for your business. If you're starting a business, choosing the right business entity is a critical step in that process, and two of the most common business structures are the corporation and limited liability company, or the LLC. Let's start with a corporation. A corporation is a separate legal entity from its owners, which provides liability protection for shareholders. This means that shareholders are only liable for the amount they have invested in the company and are not personally responsible for any debts or obligations of the corporation. The limited liability company offers similar protection for its owners. So, let's call this one a wash, as it is equal for both types of entities. There is a difference when it comes to formality. Corporations are more formal. By that, I mean that you have to take steps to keep the corporation in good standing. This includes holding regular shareholder meetings and keeping corporate minutes, for example. You don't necessarily have to do this for limited liability companies. Taxes are also a factor. The corporation can be subject to double tax. Profits are taxed at the corporate level, and then they can also be taxed at the shareholder level. Limited liability companies only have tax at the owner level. I would say that tax is mixed. There are options for mitigating double tax, which can include making a Subchapter S election. And corporations may qualify for Section 1202 stock, which can allow the shareholder to sell the corporation and pay no tax. Definitely a huge benefit if you can qualify. Employee benefits are also taxed slightly differently for corporations and limited liability companies. Again, this is mixed. Some benefits are favorable and others are not for each type of entity. The ability to prevent the transfer of ownership can be a factor. The limited liability company excels if you want to have individual investors who you want to be investors in the business. These are usually people you know or want to be in business with. Corporations can also accommodate this, but it can be more challenging to prevent corporate shareholders from disposing of their shares to third parties. How you intend to raise money for the business, if at all, may also be a factor. Both types of businesses can be used to raise money. Larger institutional investors are likely to insist on a corporation as it has set distributions and is more rigid. Smaller individual investors will expect a limited liability company as they provide more flexibility in terms of handling and distributing money. So, how do you choose the right business entity? It depends on your business goals, the type of business you want to run, and your personal circumstances. If you are a single owner and want a simple and inexpensive option, a limited liability company may be the best choice for you. If you are looking to raise significant capital, a corporation may be the better option. In conclusion, both the corporation and limited liability company have their advantages and disadvantages. By understanding the key differences between the two, you can make an informed decision about which business structure is right for your business. Remember, it's important to consider your personal circumstances and business goals when choosing the right business entity. If you have any questions or would like more information, please don't hesitate to give us a call at Assurance Financial. Whether you're starting a new business or looking to expand an existing one, we've got you covered. Reach out today to see how we can help.